everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfield, and here are 3 important things to pay attention to for the upcoming trading week. Now, last week, certainly we had some great market volatility. You had Tesla and Netflix reporting earnings, and a lot of talk about what's going to happen this upcoming week because it's way more action-packed, so many more earnings, a lot more fundamentals, a lot more economic data. So let's kick things off with the light stuff to start this week. We'll start it off with the earnings calendar. I know last week we did have a couple big names, but this week we have some seriously big players in the space which could move markets dramatically, especially with the rebalancing of the NASDAQ. So let's take a peek at our earnings calendar here. 976 companies reporting this week. We start things off on Monday with Cadence Design Systems and NXP Semiconductors. Tuesday brings you Microsoft, General Electric, Verizon, Visa, Google or Alphabet, General Motors, and 3M. And then it really starts to get bigger. Well, can't get much bigger than Microsoft on Tuesday, but we do have Meta, Thermo Fisher, AT&T, Boeing, Coca-Cola, Lam Research, and Union Pacific. Thursday, even more huge names: Amazon, Intel, Ford, MasterCard, Bristol-Myers Squibb, McDonald's, and Northrop Grumman. And just when you think it's all done, we load you up on some oil companies on Friday with ExxonMobil, Chevron, Procter & Gamble, and Colgate-Palmolive. So it is a huge week with regards to earnings. I know it's under 1,000. 1,000 seems to be like the big weeks, but these are the heavy hitters. You've got some of the most influential players in the NASDAQ 100 with Microsoft, Meta, Amazon, and Google all reporting earnings. Of course, last week we had Tesla and Netflix. So this is going to be a monstrous week. Expect tremendous volatility on just about every single day based off what happens with these earnings announcements. So now that we got earnings out of the way, let's look at services and manufacturing numbers. As I've been saying over the past couple of weeks, manufacturing is really important. It represents between 11 and 15% of GDP. And those numbers were actually bringing down our most recent GDP numbers, which puts us right about 2%, which is a little bit less than the historical average. Going back to 1947, I believe the average is right around 3.1% for US GDP. So we'd like to be up around that number. Now, how do we pop that number up? Well, to get from 2 to 3.1, we have to take some of the bad performing pieces and make them better. In this case, manufacturing. But lo and behold, it's not just about US manufacturing, it's manufacturing around the globe. So let's take a peek at that data. On Monday is when it all really starts to come to fruition. We start things off across the pond with France at 3:15 a.m. Eastern Time. Right after that, you got Germany at 3:30. Right after that, you got the whole EU at 4 a.m. Eastern Time. Then we move over to England, which is going to be at 4:30. So you got pretty much Europe represented there within an hour and 15 minutes with regard to their services manufacturing numbers. So anybody trading the pound or the euro expects some good moves there based off these numbers. And of course, we wind up with the United States later that day at 9:45 Eastern Time. That's 15 minutes into the trading session, so it should be a wild day on Monday just to kickstart that week and add some extra fun. Now, we've talked so much over the past couple years about central banks and Jerome Powell and the Federal Reserve, and they have taken center stage. But this week is a very interesting one for the U.S. markets. Why? Well, because when you look at the current expectations about a rate increase, we've heard so much from Jerome Powell and the FOMC saying they expect to see one more rate increase or slightly higher rates by the end of the year. And of course, in the recent article that I wrote, I come up with a pretty strong argument as to why I believe that they are going to pause. Now, as of this moment, right now, recording this video, there is a 99.8% chance they're going to see a raise at the meeting on Wednesday. But let's take it step by step. First off, there's the man, the myth, the legend, Mr. Jerome Powell, looking all happy. They're coming out with the Fed funds rate. That's Wednesday at 11 a.m. Eastern Time. So typical time release there. Expect a big surge up or down, right? Big volatility happens right as that announcements get released. But we go one step further. Now, with that release on Wednesday, the expectation is, as I mentioned, that there is a 99.8% chance they're going to jump from 5.25% to 5.5%. So I'm putting myself in the minority, which is 0.2% chance that they are not going to raise. And I believe the fundamental data actually supports them not raising, just being a little bit cautious, take a pause. Because remember, every time they raise rates, it puts pressure on the economy. And right now, they don't want to be doing that. They want to make sure that they get inflation down. They want to keep unemployment steady. And they're doing all of that with rates right where they're at. So I actually think you're going to see a surprise on Wednesday. But hey, you know what? Don't go off my words. follow the market, do what the market tells you. Best recommendation would be to stay out of the markets at 2 p.m. Eastern time on Wednesday. But that's really the initial statement. The big stuff, the fireworks are going to happen at the press conference, which is shortly after that. That is Wednesday at 2:30 Eastern time. So 30 minutes after you get the rate announcement, you will have Jerome Powell grilled by a whole bunch of reporters about what the FOMC is thinking with regards to future rate hikes, future pauses, future cuts, how they feel the economy is doing, and of course, how they feel the economy is doing becomes a big factor in determining what their policy is going to be. And as we've seen with the massive amount of increases that they've done to the Fed funds rate, they've increased as of this point, right before the meeting on the 26th, they have increased 5.25% in the last 16 months. That is an unprecedented run that we have not seen since 1980. You haven't seen numbers go up that quickly. So it's been an aggressive raise in rates. We'll see if they decide to pause again since they paused at the last meeting. And that, my friends, is your Monday morning must-knows. We will see you next week.